So the Fed just made their move. They lowered rates by 0.25. And what does that actually mean for mortgage rates? There's always a ton of confusion. There's a lot of noise after a Fed meeting and a lot of misinformation, quite honestly, from people in our own industry. So I wanted to create this video to talk about the Fed meeting, what happened at the Fed meeting, what to expect moving forward. Are mortgage rates going to move lower? And really just make sure everybody is understanding what exactly is going on. My name is Eric Hamilton. I am a top 1% mortgage lender in the country. This is my YouTube page where I try to cut through the noise. I'm a data-driven loan officer, so I try to share that data to help the average consumer know and understand what's going on in the market. So what I want to walk you through is what's happening so far leading up to this Fed meeting, what's happened in the past, and kind of what the strategy is moving forward between now and the end of the year, because there are a lot of great opportunities. We are at a 3-year low in mortgage rates. Okay, so that is significant. At the end of the day, we entered before the rate cut at a 3-year low in mortgage rates. So that is significant. So let's talk about the Fed rate cut. So the Fed does not control mortgage rates. They control the Fed funds rate. And the Fed funds rate is what banks use to charge to lend money overnight. Okay, now the bond market pretty much controls the mortgage market. That's what the mortgage market follows. Now, the bond market, and everybody is watching the Fed, so they're indirectly related, but it doesn't mean that mortgage rates are 0.25% lower today. Essentially, what's happened is over the last several months, mortgage rates are about almost a full percentage lower because we were close to 7% shortly after tariffs were announced and spent most of the summer in the upper 6 to 7% range. So today, with an average 30-year fixed around 6.1%, we are in a much better position. Now let's talk about what happens after a Fed rate cut. So the market and the bond market positions itself ahead of a Fed rate cut. So the market was already predicting this. The Fed doesn't want to surprise the market, so they have already priced this into the market. As you can see, these red circles are previous Fed rate cuts in previous markets. So the first one from left to right is from February 1st, March 22nd, and May 3rd. We had 3 Fed rate cuts. What happened after that? Rates went higher all the way from where we're at about right now, a little bit higher, all the way up to 8%. Then again, September 18th, 2024, we had another rate cut. What happened? Rates went back up over 7%. Now, past performance does not guarantee future results, but it is very, very important to know and understand that there is a phenomenon when it comes to the Fed meetings that it's called buy the news, buy the rumor, sell the news. So basically, the market positions up in front. Now they're forward thinking. They're looking for what's going to happen in the future. And right now, we don't know that. So you have to think about strategy. What is the strategy I'm going to use as a buyer, a seller, if I'm going to refinance? And right now, you got to be very careful to sit back and not lean into this to know what's going on. Now, we don't know if rates are going to go up, but it is something to think about. So the next thing I'll have you think about is, where rates are right now. So again, 6.22%, okay? We've been as low as 6.11 all the way up to 7.26 in the last year. So that is significant. So we're on the lower end. So that is an indication that we're on the lower end, and it's a good opportunity to re-enter the market. The other thing to think about is mortgage applications are at almost at a yearly high. They're up over 20% year over year and have continued to be up year over year. Why is that important? Demand. We don't have a lot of inventory. So there's a lot of buyers that are re-entering the market and getting back into the market. So when we see a lot of applications picking up, that's demand. And that's significant because it's much higher than last year. The other thing to think about is inventory. And these are probably one of the most important things that I discuss with the consumers that I work with, and why I spend so much time talking about inventory, because there's so much confusion and noise around inventory. In 2025, inventory is much higher than it was for the previous years, but we should always compare everything back to 2019. If you go back to during COVID and you're comparing it, yes, inventory is higher, but you have to think back to 2019. Nobody, not a single person, was worried about inventory. Any realtor, anybody thought there was too much inventory in 2019. And we are still, as you can see with that red line there, we are still well below 2019 levels. That is significant. Now, when you come to Illinois, this is something that's really significant. Illinois is still 62% below where we were in 2019, okay? From August of 2019 to August of 2025, we have 62% less inventory. Why is that important? because we have interest rates coming down. For every 1% interest rates move lower, we have 5 million buyers that can re-enter the market. So what's going to happen if interest rates come down? We have purchase applications increasing. Competition is going to increase. Prices are going to move higher. That's why it's important to know and understand dynamics of inventory, because there's really no catalyst for home prices to move lower in an environment where inventory is down 62%. So this just kind of gives you a little bit of for Chicagoland area, for people in my market and for people near my office. The red dot on the left shows how many listings were on the market in 2019. Okay. So if you think about that, we had over 40,000 listings that were on the market and not under contract in 2019. And right now, at the end of August, we were averaging only around 16,000. So this is all of the Chicagoland area, all the suburbs, the majority of the Illinois market that we all work in the Chicagoland area. We have that much less inventory today than we did in 2019. So when people talk about home prices going down, it's almost impossible for them to go down. Now, will you see price reductions? Absolutely. People list a home way higher than it should be, and it causes a price reduction. But the actual sale prices are up year over year, anywhere between 5 to 7%, and will continue to move higher. Now, will you see some price deterioration in other markets? Yes. But if interest rates were to continue to move lower, that's going to put a lot of pressure moving forward. So as a buyer, you have to be aggressive. You have to think about certainty and putting yourself in the best position to win. If you're looking to refinance, you have to really think about, do you wait and risk rates moving higher, or do you move now? I am of the opinion that if you can save money now, it's a good idea to think about moving now. And then if you have to sell and buy, I think this is an amazing time. You're going to have an easy time selling your house, but you got to be careful waiting that it gets too competitive on the buy side. Because if you don't qualify for a bridge loan or selling without buying, buying without selling, you're going to be in a very competitive market, and it's going to make it very difficult. So I hope this helps you out moving forward. As always, feel free to reach out. I'll have my link in the bio below in the description. I, schedule time 7 days a week from 7 in the morning to 11 o'clock at night with clients. I have been, back to back on appointments, talking through refinance strategies, helping people save $200, $300, $400 a month, doing cash out refinances to help people restructure their debt, sell a home, buy a home. People have really reacted well to mortgage rates moving lower. So it's a great time to revisit. Now, you can have the consultation, review your options, decide not to do anything, but it's a much better reason to hold off once you have all of your information and you're making an informed decision than making a decision based off of fear. Strategy is always going to win over fear. So if you have any questions, reach out. We'll be more than happy to help you out.